Okay, so the review of last semester activity, the key thing here is how did our stock portfolio perform? So as mentioned, for the last semester, what we did was this. Every month we just look at 5 stocks. Okay, we just look at 5 stocks. Then during the money activity, I talk about how I actually select all these 5 stocks. And of course, how we analyze these 5 stocks. So really, it's not about stock recommendation, but really, hopefully by, keep repeating the process of how I analyze stocks, then you also get the hang of it. So a lot of times I don't understand, you come and attend my course, you learn the process, very good, very good, but after a while you keep forgetting. So I actually do this on a monthly basis. I keep repeating. After a while, you also know exactly what to do. Okay. So I actually sort of break down. Okay, so every month we will actually look at different category of stocks. So of course we have income stocks. Okay, that means those that you buy, hold to collect dividends. And after a while, as you can see, so every month we'll look at least 1 or 2 counters. Okay, at least 2 counters. 2 counters. Okay. Then of course, over time, if you on a monthly basis you buy, and then you eventually form an income portfolio. So that is the other thing I'm trying to demonstrate also. Eventually, you have to buy over time. So if you can recall my course, I always talk about diversify over different stocks over different time. Okay, so later we'll see how it perform. So of course, we also talk about growth stocks. Okay, when we do in-depth, we don't just look at income stocks. We also talk about growth stocks. And for this semester, that means first half 2024. Okay, first half 2024. We also even have this new category called the up and coming, or the high risk category. So we'll talk about it very soon. So these are the income stocks that we have reviewed over the past 6 months. By the way, all these are recorded. So of course, for those who were part of the investment gathering, all these are recorded. If you like, you could go and review, okay, the videos that were sent to you. Of course, later I'll share with you the YouTube channel. Okay, the YouTube channel as well. Maybe you can go access it. But if not, for those who actually joined the investment gathering in the last semester, okay, all this recording, you can access it with the link that was sent to you. Okay, so these are all the income stocks we actually look at for the past 6 months. And you can see that the results, I would say, is not too shabby. So you can see most of them are making money or in the money. We chose 2 that are not making money or loss. Okay, but 6 months is too short a time. I wouldn't say that, oh, this is a lousy choice. Okay, it's just too short a time, 6 months. Okay, so on average, the return is 1.3% over 6 months, but this excludes dividends. So this is expected. So if you talk about income stocks, you can't really expect the capital. So this 1.3%, it just basically on the capital average. Okay, that means I average all these returns. And by the way, these are not annualized. This is just the 6 months, or some even lesser than 6 months. These are the 6 months or lesser 6 month return. Okay, average is 1.3%, but this is what you expect for income portfolio. You cannot expect a very good return. So by the way, income stock, we just buy, hold, collect dividends. Okay, but if you zoom in, we actually got quite a few good picks. So CICT went up by 8.9%. Maple Tree Industrial Trust, this was in May actually, went up by 5.5%. So not too bad. At the same time, we have this plot next. So we pick it up in Feb, dropped by 7.8%. But like I said, it's too short a time to say that, oh, this is a wrong choice. Okay, end of the day, if you go income, must be long-term portfolio. So a few things you want to take note later with a comparison. So income portfolio, you can see average return excluding dividends is 1.3, and you can see the max and minimum. So the maximum about 8.9%, loss is about 7.8%. So later for comparison with growth, you can have a sense. Okay, so these are the income portfolio. Of course, if there is any questions, So please ask. How we actually pick up all these stocks is at that point in time, what we think is the best instrument, or at least from my point of view, what are the best instrument that actually can give good income. Okay, so I would say this is not too bad. Now, we look at the growth portfolio. So as mentioned, usually out of 5 stocks, we will actually pick 5 stocks. Every month pick 5 stocks. Usually out of the 5 stocks, I will look at least 1 or 2 growth stocks. Okay. So yep. And interestingly, and the growth stocks will include the US or non-Singapore stocks as well. Okay, non-Singapore stocks as well. So like include US stocks, as you can see here. Okay, then of course, same thing, we actually do the same analysis, so on and so forth. And interestingly, I think this is a really outlier. So for the semester, in fact, the top winner is Samudara. We actually pick up this stock in February. So for those who actually take action now, congratulations. You have made like 36.3%. Samudara. Of course, at the same time, the worst performer is Albemarle. Okay. It dropped by 22%. Okay, average is about 6%. Now, but can you see compared with income stocks? Okay, compared with income stocks in terms of return, can you see that is what we actually call more volatile, or the spread is actually larger? Okay, so income stock, you see the highest is 8.9. Okay, for growth stocks, highest actually went up to 36.3 over the same 6-month period. Whereas income stock, the one that actually made the highest loss is only about 7.8%. Whereas for growth went up to 22%. So this is very typical of a growth portfolio. Higher risk, higher return. Okay, higher return in terms of potential return. You can see that you can actually get higher potential return. At the same time, what we call is more volatile, or the spread is actually higher. Okay, but average is actually 6%. Okay, so these are some of the growth stocks we have spotted. Now, some of the session, we actually do it with very thematic. Like, for example, some of the stocks we put here is based on the AI team. Okay, we have one session talking about AI team. How do we invest in AI if you want to? We have also one session to talk about the latest technology, how to invest in the latest technology. That's why, companies like Rockwell, companies like Li Auto, companies like CATL come into picture. So for the Singapore growth stocks, in fact, I must say that it performed quite well. Samudara, okay, 36%. We also saw this TopMed, okay, medical company. So this one, why is it growing? Because can remember what's the growth story for TopMed? Anyone? Anyone can remember what's the growth story for TopMed? Anyone want to make a guess? TopMed, what's the growth story? Anyone can remember? Okay, so basically TopMed is like cancer treatment, and they are actually expanding into China. So that was how it was spotted as a growth. SZ is Shenzhen. SZ is Shenzhen. This was listed in Shenzhen. Okay. So venture, we actually selected venture because this is the one that's closest to AI. Okay, closest to AI. We had a team on AI. They want to find AI stocks in Singapore. This is the one that's closest. Venture, so not too bad. Also went up. Jumbo was chosen because more of recovery. More of recovery is that now, of course, you go to Jumbo Seafood. I'm quite sure if you go now, you probably have a queue or cannot get a seat. So there's actually very clear growth story. So it's actually chosen. And yep. Okay, so in fact, the Singapore growth stock has actually performed not too bad. Okay, any questions on the growth portfolio? Okay, so one thing I would like you to see is really the kind of risk between the growth portfolio and income portfolio. Also, of course, if you cannot stomach risk, if you want something very steady, the drop not so much. Okay, so income stocks will be more suitable for you. You collect dividend. The spread is about, as you can see, 8.9%, 7.8%. Whereas if you want to get into growth stocks, there's a chance for you to get like 36.3%. This is over how long? Only like 5 months. Okay, 4-5 months. Okay, at the same time, you can also pick something that, as you can see, over just 3-4 months, you can lose by 22%. Do you buy and hold for growth stocks? Yeah. So of course, this is for discussion. This is more for discussion for Singapore. Okay. For this particular year, personally, my personal portfolio, I did not go into a lot of growth stocks. Okay, not that. Okay, like I said, this one is just more for reference. Okay, so of course, if you actually join our session in January, okay, I wasn't too confident about the market. So I was actually more focused on income rather than growth for my personal portfolio, one personal portfolio. So of course, if we actually talk about growth stocks, yeah, it's also good to have the mentality of, buy and hold. Okay, buy and hold for long term. Okay, buy and hold for long term. Okay, next, we also look into some of the what we call the high risk stocks. Okay, like I said, this is more for discussion purpose. Okay, high risk stocks. Okay, so again, by the way, so when we actually do this, it's definitely not stock recommendations. It's really about give you different examples. Then of course you yourself to make your own investment decision. So we also look at the category high risk. Why is it high risk? These stocks are either overvalued or either that they are not profitable yet, or either that they did not pass my 6 tests. Okay. Or either that, they are risky assets. That means they use risky assets, like for example, crypto. Okay. So we actually look at them because certain months we have a thematic. We actually look at certain themes. Okay, like I mentioned just now, we have one on AI themes. So this is stock like, for example, TSMC, Google, Qualcomm come to the picture. Then we have stock side. We have one session in actually June. Okay, you can see mostly in June. We actually look at all the latest high tech. Okay, latest technology. So we have Mera that look at crypto, Exact Science, okay, that look at biotech. Okay, Adobe that look at AR, augmented reality. Okay, Doximity is also a biotech product. Dexcom is also a biotech product. So these are what I call high risk stocks. High risk stocks for these reasons as mentioned. Okay, so these stocks I definitely didn't touch myself personally. So it was actually more for discussion. This is really more for those, who thinks that they could actually assume higher risks, hopefully get high return. But interestingly, you can see that the return is not as good as those which what I call growth stock, but safer in a sense that they are not overvalued. Okay, they are already profitable. So by the way, all those stocks now here, they are not overvalued. They are profitable already. They pass the 6 tests and they don't deal with risky assets. Okay. Okay. So, yep. And average return is about 4.9%. And the spread, as you can see, wow, this one, the loss is a lot higher. Okay. So these are the different stocks that we have discussed over the past 6 months. So it's actually good to review some of the results. But like I said, actually 6 months may not be enough time to look at the performance. So just to give you a sense, just to have a quick review. Okay. Anybody has any questions so far? Okay, if not, I think let's get to the learning point. let's get to the learning point. Okay, I think over the past 6 months, some of the key learning points, at least I myself have captured here is this. Number one, keep invested. Keep invested. So at the beginning of this year, so in fact, the market, or at least my expectation of the market wasn't too good. So if you all can recall, I was actually expect a market to correct to a point that maybe there's even recession. Okay, that was my market outlook in January. Oh, so it didn't happen. It didn't happen. So like I said, sometimes all this outlook is it's not a matter of whether I got it correct, then I'm accurate, I'm good. No, it's just basically give me a guiding principle. So of course, it didn't turn out perfect, but hey, that's life. I rather do something, okay, and yeah, sometimes I didn't get it as correct, rather than don't do anything, then just decome. So at that point in time, I was more of risk adverse. So basically, the key learning point here is this, okay, don't go to the extent that if you think that market will correct, then you do nothing. So some people will actually think that, wow, since I think market is correct, then I don't buy, then I sell and wait. Okay. So I think the key learning point here is this, no lah. Okay, don't think that we can outsmart Mr. Market. So what I did, or what I think I should have done, what I did is really like, for example, the income stock, I still will buy. I still actually continue to buy. And growth stock, I did not buy as much. I did not buy as much. But at least I buy income stock. So really the key learning point is, don't think we can outstart the market, even if we think that market is bearish, market to down. I think it's still to keep invested, but of course in a more controlled manner. So if you are really afraid, maybe just focus on income stock. If you think that, okay, maybe there is still only a slight chance, maybe go into growth, something like that. Well, which lead to my second learning point after reviewing the 6 months. It's good to categorize stocks into these following categories and invest according to market conditions and investment objective. So of course, my objective is to actually build a dividend portfolio eventually. I actually invest in growth, hopefully to accelerate the process. That means get the targeted portfolio size earlier. Okay. So in that sense, of course, income stocks are actually basically now done regular investing. So, yep. So one good thing is, that was being carried on. So actually, it's actually still being done, still invest in income stocks. So growth stocks, yes, would have invested. And the high risk stocks, I would not have touched. So just to give you a sense. So I think this is one good way for you all to have a sense of whether, next time, okay, it's a reference point. Okay? Like, for example, going forward, if you see this stock, should you have invested or not? So number one, really based on the market condition. Like, for example, January, I felt that the market is actually going to come down. Okay. But what I did is, I think income stocks, okay, we should still keep invest. Okay, growth stocks, it depends on the risk that you're willing to take, but high risk, I will only invest when I think that the market is bullish. Okay, when the market is bullish. Okay, Kwan, I answer your question later. So hopefully this gives you some idea of, how do you combine market conditions versus the stock. So number one, when you see a stocks, you may actually want to break it down into these three parts. Okay, put that in these three categories. Number two, depend on market conditions. Of course, if you think that, okay, market is bullish, then maybe, you can just invest in all three. If you think that the market is super bearish, maybe just invest in one of them, income. Okay. If you think that, market maybe sideways, then maybe can income and growth. Okay. And again, like I said, I don't think it's a good idea to don't invest at all. Okay. Okay. Like even you think the market is going and then wait until correct. I don't think it's a good idea. So of course, the third learning point, as you can see, is high return over high risk. No risk, can. high return, high risk. Okay, so again, risk is actually in terms of volatility. If you actually want to target this kind of return, then you must be willing to bear with this kind of loss. So whereas for income, as you can see, okay, the return is lower, but the loss is also lower. Okay, so here is the question. Okay, I think want to seek your point of view as well. Here is the question. So if let's say, for example, I want to invest in growth stock, obviously I want to target this kind of return. But if I buy a lot, right, so very likely I will also hit this kind of return. Okay, negative return. Okay, so usually, let's say, for example, growth stock, assuming if you just buy all this list, you have some perform very well, some perform very low. So another school of thought here is this: why don't I just buy, maybe one or two? So that means if let's say one or two, I'm so lucky I hit it here. Okay, then of course I make a lot more money But if I'm so sway, my one or two stock is also here, all here, then of course I lost. So what would be your strategy for growth stock? Is it A, whereby you diversify, okay, and then you just like do something very similar to this, you just spread over all, diversify, then probably even you hit a return of 6%, or B, you just bet either only a one or two, so you will either make 36, 25%, or you lose 22%. Which one is your preferred way to invest in growth stock, A or B? A is diversify and get average return, or B, okay, have a chance to make 30%, at the same time have a chance to lose 20%. Okay, interesting. So of course, there's no right or wrong answer, to each his own. Okay. Interesting. Okay. So, but this is fact of life. You cannot have both worlds. So of course, if you go for A, eventually, long-term average out. Okay, if you buy a lot, sure have one or two that don't make for you. Then you just can go for average return of 6%. Of course, you're happy with it. I think that's not too shabby as well. Okay, but you buy B, yes, there's a good chance for 36, 25%. There's also a good chance for losing 22%. So, yep, see what's for you. Of course, it's, I think, okay to just invest in comfort for. Like I said, it depends on your objective. So personally, to achieve my objective of creating a dividend portfolio, right? Hopefully you all can remember, maybe just to have a little refresher, what is the kind of monthly, what's the kind of monthly passive income I am trying to achieve? Anyone can remember? What is the amount of passive income I'm trying to achieve? I know I keep asking, I'm quite 7K. Thank you so much, just 7K. So if let's say, for example, for me, if I were to just focus on income stocks, right? I probably will still achieve it, but it take longer time. Okay, I'll take longer time. Like for example, if I just buy here, every month buy. Okay, eventually I will hit the portfolio that give me 7K, but I'll take longer time. So I actually wanted to go into growth so that to shorten the time. But if you think that no, it's okay, the risk is too high for you, you don't want to stomach the risk, you're okay with the time, sure, why not? Can stick to income. Okay, Adeline, hope I answer your question. However, should I diversify or bet only a few? So a lot, it actually depends on your portfolio management. Okay, again, reiterate what I just mentioned just now. Mine is generate passive income for financial freedom, 7,000 per month. So I will actually stick to 70% regular investing lah. In fact, more or less, I'm doing something a bit like dollar cost averaging. So every month about the same amount. The only time that I don't invest is when I have no money. Okay, frankly, sometimes I have no money. Okay. I don't have income, there's no choice. You know, in my nature of job, my salary is actually not fixed one. Okay. Or either that when I cannot find a income stock, whereby I think is what they call that, you know, either fair or undervalued, which so far, I think very seldom. Okay, that means okay, the price is so high that I cannot find anything to invest. I think so far, or at least for the past 5 years, that didn't happen. Even though when, let's say in January, I was expecting market to come down, okay, I'm actually still preaching that, hey, you know, should keep invested. Okay, luckily I did that because you know, market actually performed better than expected. 25% on opportunity ad hoc purchase. So this 25%, I will actually go a long term, I will diversify. That means this 25%, I'll target. Okay, definitely not 6%. 6% is, I think, just half yearly. Okay, if you invest in growth stock long term, I think you should be looking at about at least 12 to 15%. 12 to 15%. Okay, so for those who actually want to invest in growth stocks, okay, I would suggest, you just allocate the funds based on funds. Yeah, then after that, take 5%. I always talk about I have this gambling fund. I have this gambling fund. Yeah, so this is where I make small bets. So this one is where, you know, if I hit it, I make 30%. If I lose 20%. So this is the amount of money that my wife don't know about. I always like to jokingly say. Okay, yeah. So to answer your question on, you know, should it be diversify or make a small bets? Okay, maybe what you can do is a suggestion. Is like what I do. I put money in different pots. Okay, I know that this 70%, okay, very likely just depending on this 70% alone, I can hit my objective, but it take longer time. Okay, then if I got a bit of spare cash, I can also build a growth portfolio. Okay, and yeah, maybe what I call some gambling funds to really make that small bets in the high risk, what they call that, the high risk type of stocks.